Okay. Stock of the day, let's go from retail to lithium. IGO's second quarter sales revenue dropped 11% from quarter after record sales from its nickel business, and an 18-day production outage as a result of a power station fire in December adversely affected some of the sales. Net profit for the quarter though jumped 33% due to increased earnings contribution from its lithium business. Mark, you've been following this sector for a while, IGO for a while. What did you think?
Look, I think this is probably a reflection of where the market's at the moment. Is we've really got a the market's expectations were really high for this one. So and look, they had record divs, record EBIT, and their net debt dropped by 56%. I think that TLEA joint venture for the lithium, the dividend jumped by 212% quarter on quarter, which is quite phenomenal. They bought essential metals as well within that, but there's their flag cost worries, rising costs, etc. They reduced the production guidance. It's unfortunate. 18-day outage is quite a bit, really. It's very close to a month, I suppose, and that's really disappointed with their nickel production. And but I mean, look, nickel prices has risen about 6%, and I think overall this was just a case of the market having too high expectations. It's got from a technical standpoint, it's on a nice uptrend. It was sort of peaking up around towards record highs. So look, we'd probably buy in a pullback towards the 200-day moving average around 13. Right. We've had a few lithium producers on. We're not really haven't been considering the explorers or anything that's more than 12 months off. So, but you've got a hold. I would say, look, if you own it, you're holding it. I think if you're coming in with fresh money, I think you'll probably get somewhere around the $13 mark, because I think the market's probably in for a bit of downside over the next couple of months.
Mark?
It's not one we follow, so I don't know. Well, just looking at their numbers, I mean, their earnings have jumped up. Obviously, they're riding the lithium boom, because a lot of that's price-based, and you can have a view on that, and there's different opinions in the market. Our view is that lithium's likely to stay stronger for longer, not in a straight line, but Min is our main lithium stock, which funny, because it never gets mentioned, it rarely gets mentioned in the press when they're talking lithium, because it's not pure play. But it's a big lithium. I think it's number 4 in the world now.
Right,
something like that. So
but it's iron ore.
Yeah, but it's our biggest. It must be our biggest.
I think it's our biggest. Yeah, absolutely.
Right. And they're also producing hydroxide now. So they had the last quarter they came out with 40. I think they did 40 tons of hydroxide, which is now in production. And there's $45,000 a ton or something. So what they've done is obviously captured the economic value through the whole production process. Is what Min wants to do. Yeah. So that's our focus. So I don't know much about this. I mean, I'm showing on our numbers it looks all right. It's on a 29 PE though, which it's in the high black. So for this company, for IGO, to get it in the green, which is the bottom quartile, and that happens every year. Remember, the PE range for each company varies each year. Yeah. We're showing $12.45 is the price, which is similar to what Mark's saying, and that's feasible. Yeah. That if you like it.
It was there in late November. Yeah. So it's not. There has been a little.
But it looks okay. But I don't know anything about the business.
So wait for $13.